Good day, traders. You're welcome back to my channel. This is DJ Journalist. Once again, we are here with another video that is going to help you traders in your trading journey. So today, guys, I'm going to be teaching us key levels. All right, so we are going to talk about key levels. How do you mark out your key levels on your trade? Because I understand many traders don't really know how to identify their key levels or key zones, where if the expecting market to come to, market can come there to test their key level or get some market or price reactions before price moves to the anticipated direction. So I'm going to be showing you guys how you can identify your key levels in this video. So guys, if you are new to my channel, please do want to like, subscribe, and share so that it can go viral to so many that really wants to learn this. Okay, so thank you guys. Let's go, or let's dive into the video. All right, so we're talking about what is key level. Okay, so we're talking about what is key level because it's very important that you understand what is key level, or you can also call it a point of interest because they are two are alike. All right, so when I talk about key level, I'm talking about my point of interest as well. So what is key levels? We say key levels, or you can say key levels, they are significant zones or area which we expect some price action reaction or movement. Okay, so there are areas we expect price action reactions. All right, so we expect price action reactions and price movement. So which I'm going to be showing us in this video. So when we talk about key levels, this is what we're talking about, the key levels. And okay, let me give, for instance, before I go into the video, okay, before I go into the charts, so let's say we have something like this, for instance, then so right now this becomes my key level. Can you see this now? So as price moves, come back here. Now I'm marking this support or other block. Okay. So I'm marking this support or other block around this place here, or this zone here. So this becomes my key level, which I'm expecting market when price comes to this area then to push. So I'm just giving us instance of key level, which I'm going to be showing now. So now let's dive to examples of key levels in the market. Okay, examples of key levels in the market. Now we have examples of key levels in the market. Okay, so these are the few examples of key levels, which majorly me mostly I trade because I don't really trade, sorry, excuse me, I don't really trade so many. Okay, so these are the few I personally trade. So these are my key levels I use in my trading. So we have example, we have the support and resistance. This support and resistance, trend line, other blocks, and fair value gap, which can also be said to be an imbalance. Okay, so I don't really look for more. I don't look for much in my trading, in my key levels. All right, I also have another one again, which the fifth, that is Fibonacci level. So those five, I don't really trade more. I don't trade much on my key zones, but these ones are the ones I use majorly for my key levels. Now let's dive to the first one, which we have a support and resistance. Okay, now the support and resistance is a very common key levels many traders trade, but not all traders actually know how to use the support and resistance level. All right, so I'm going to be showing you how I mark my own support and resistance as my key level. So we have support and resistance, which can also we can also get a break and retest, which is to say support turns to resistance. So let me give an instance rather than talking. Let me give example. So let's say we have something like this. Okay. So traders, you can see this here on my chart. So this first one over here, this one here, you can see that this is a support. Price came here from a downtrend, bounces up, and came back again to test that support order block here. Okay, so we have a support. So I'm starting with the support first. So you can see price came to the support zone and went up. So this is a valid support. All right. So this is a valid support. Price came, went back again to test that. So if I'm to mark my key, I will have drawn a zone here. So when price comes here, then once it touches that place, bounces off again, then I will take entry at this point here. So this one you can see here, this is a break and retest. So we have resistance, a support, I mean to say turn to resistance over here. So we can call this a breaker block. So you see that this block was taken out and price came to test it down. So this is majorly what we see on the chart. Okay, so when it comes to trading our key levels. So we can also see this one again, which is a resistance zone. So which we have as a resistance. So this one now has become my, I will mark this place here because this has become my key level. Okay, so I have this here. So you can see price comes at this point here to test that resistance level here. So having said more, let's go to the charts. Okay, let me show you guys on the chart so that you can identify it on the chart when you see such, because there are ways these things occur. All right, they might not really show up in a way that you might notice it. So, and this can also be you can mark them for the support and resistance. Another way again is you must make sure that price is either also on a structural levels. Okay, so must make sure price is on a structure level. I will tell you guys what I mean by that. So let's okay, traders. So here we are now on this very chart. So I want to show you guys our first example of key levels we talked about. So let's we're going to start with support and resistance. So let's go down to our chart. Okay. Okay. So when we talk about the support and resistance, we say support is an area or zone that holds price or holds buyers to buy. The while resistance is areas that market comes to what to sell, which I know many of us are conversant with that. So now let me show you guys what I was talking about when you want to get your resistance level in the market. Okay, so what I'm seeing here is actually a bullish structure, which you can see. You can see bullish market structure around this area. This is a bullish market. So I'm looking for a good support zone. Okay, so I'm looking for a good support zone. Let's go down to lower time frame more. Okay. So actually we have a support here, but I just want to show us something here. So this is our support. Okay. We have the support level here. Remember that we are talking about support and resistance. First, just follow what I'm doing. So we're talking about the support and resistance. So we're marking our support here. Now, why do I mark here the support? Regardless of the market selling, okay, you can see after the market bought and still drop down. That is not what we're talking about first. I just want us to understand these things I'm doing here. So this becomes our support. In other words, I told you guys that we can see that buyers are here already. Okay, we have some buy orders resting around this zone or this key level here. So you can see that when price came here, one, and let me draw this because it's a zone. Okay, so we have this as a zone. So we have buyers coming around this period. Okay, so buyers came here, one, two, and the third time, the third time they came into this place, and you can see they give us a buy. Then before the market itself follow the directional trend of the market. So we had that as our buy zone. Okay, so let's still see if we can find another one again. So let's see if we can find another one again. So, and we are going to mark out for that of the resistance level. So if you go at that of the resistance market, okay, so like I was saying, I said earlier on that also you make sure that if you can't see a market on, for you to mark a support and resistance, there are two things that market must be doing. Okay, is either market is on this visa market is on a bullish structure or bearish structure, or it is either on this formation. Yeah. Okay, so it's either market is on this formation, which I'm showing you guys now, which we'll call most signs, we call it a range. Okay. So which most times we trader call it a range. So market must be at this formation. So can you see this trader? So we have this point, this place here now, regardless of what we are seeing, but this is our resistance level. Okay. Now we understand that markets, this is a market liquidity. Okay. Sellers are here, and so we also have buyers too. So retail traders are buying and selling at that point. So this is also what we also see most times, and also in this formation as well, which I talked about, either market on a bullish structure or bearish, sorry. Just like this is another one again, we can see market on a bearish structure. So we mark our support and resistance, or you can see price after it has broken this, which I'm going to come to that. So I'm not on that for now. So let's continue. So we're looking for resistance area in the market. All right. So yeah, we can see this one here currently. Yes, this is another one again, guys. So we have our resistance around that point there. Okay. So you can see this. So we have this resistance market level here. So you see that market came here 1, 2, and we have this touch here. So you see the market sold but break above. All right. So there are principles that guides this. You don't just buy or sell anyhow. And even if you are selling, you should understand. Now, even if I'm selling this, I can figure out and tell reasons why market was doing scenarios like this. So even if you are buying or selling at a support or resistance level, which you claim to be your key zones, also understand, learn to understand what market was actually doing on the chart, or what price action was doing. Okay, so you don't end up getting caught in the market, because many traders don't, even if they are selling or buying at their key level, they don't understand what market was doing. You just enter the buy and sell. So even if you're buying and selling, make sure you do, before you go into your, and of course, before you do your key level, you must make sure that you have already understand your market structure, or you've already understand your market, done your market analysis. Because before you can get key levels in the market, analysis must be done first. All right. So your analysis must be done first before you go into key level. So this now you can see this, because I understand the reason why market was doing this. If you check, you see that we have resistance here, and market's resistance at this point again. But you can find out that at this point here, market did not. You find out at this point here, market did not break this point here. Okay, so we had to mark this our level here. So we had the support. Yeah, if you look closely, you see we had the support at this point here. So market came at this support here and break above, because the market was ranging around this point. If you can see it clearly, we only have highs here. So you can see liquidity, minor resistance level around this point, and you can see market liquidity up here. So you can see that price action was struggling to break above, was ranging around this point here. Yeah, before the breakout here, and the market started buying continuously. So this is a resistance level here, and you can also see a support, which I just marked here right now currently. So we had a support right there. So, and the market continue moving up just like that before it reversed around this point. So now we are done with support and resistance. area. So the next one which I have on my list here is the trend line. Okay, so I'll be talking about the trend line because the trend line is another significant thing that every trader or traders trade to as well. But many of us, many a times, we don't understand how this thing works. So let me show you now because the chart I am now is giving me what I need. So let me do it here right now so that you guys can see and what I'm talking about here. So this is another key level area we'll talk about. So we'll talk about the trend line. So we'll talk about this trend line here. So you can see these guys that we can see these traders that this is a trend line. If you look here, you see the market, we have this market bounces off, came here, bounces off again. Then we can also see here one, look at the touch, 1, 2, and 3. Remember, for the trend line rule, you must understand that the rule for trend line says that market must touch at least or have around 3 touch. Okay, so we have 1, 2, and 3. So this third touch here, let me show you guys. I know many of us do not understand this. So you can see this. Okay, let me use this. So we have around 3 touch here. So we have this first touch 1, and we have 2, and we have the 3 touch here. So you can see here that 1, 2, and 3. So the third touch here, you can see how price bought from this point when it touches the trend line and move up. And mind you, before you price comes to your key level, make sure you're taking notes of these things I'm saying. Now, many traders make that mistake, or should I say most traders make that mistake. Because market is at your key level, does not necessarily mean that automatically you start buying or selling. All right. You must also wait for confirmations. Confirmations of your trade is very important as a trader. Okay, that is not what I'm going to be showing in this video. So confirmations for your trade is very, very important. Now you can see this again, guys. So support and resistance, which I told you that become my key level. You can see this. Traders, can you see this, guys? So we have this break and retest. Okay, so you can see that this resistance or this high was broken. Now, as we have this resistance, a breaker block, and price came to test this support, this resistance here, and resistance here turns to a support. Resistance turns to a support around this point here. So at that from that region now, the market started to buy from there. Okay, so we have price action buying from this point here to this level here. So these guys, you can see that price action came here to retest this resistance, this high here. So we have support here, the resistance here turned to support at this region here. And you can see how the market started buying from there because the market is a bullish market. I told you guys that you must understand, first of all, your trend is very, very important. You must understand your trend. So we know that the trend is a buy market. So that is why I had to mark this zone here. Then when price comes to this point here, then you can see how price came here, we test this resistance and continue the bullish buy the upside. So, and you can see we have a trend line here. So mark that trend line 1, 2, and 3 touch the market, continue the buy too as well. So now we are done with the trend line. Now the next one again is the other block. Okay. Now you can also mark before I go to the other block, also do that the same trend line on this or this one here currently right now. This resistance, this sell the market is giving us here. You can do the same. You can see these guys. So can you see this now? I'm sorry, I'm doing this on this 8 hours time frame. So you can even go down to lower time frame. So you can your 4 hours. Okay, so but I usually advise traders that you make sure that if you are carrying out these processes or whatever, make sure that it's on you do it or market on the higher time frame. So you can also see again, we have a break and retest of market here. So you can see market broke this support region here. So we have these supports that are broken and price came to retest that point here. So you can see these guys. So trend line, you can see my confidence is now 1, 2, and 3. The same place where my trend line is. Now I also have another key levels again here, which was broken. Guys, are you seeing what I'm doing now? We have markets broke this support with the sell. This is a support. And my trend line, which I drew, you can see having about 3 touch here, having about 3 touch, 1, 2, and 3. So you can see these now double confirmations, all right? So you see why I said it's very important you know how to mark your key levels in the market. So, and you can see this is where I took my entry. I've been selling this market for about since how many days now. So because I noticed when price broke this, I took my entry at this with double confirmations, 1, 2. And also the third confirmation again, which I want to talk about here, is the other block concept. So you can see this, we have this other block here, this bearish other block around this place here. We have a bearish other block too around this region as well. So this is confirmations that made me took a trade. Let me delete that one first. Now we have this other block here. You can see this. Guys, a bearish other block. You can see this is the last bullish candle that brought about this, and market came back to test that other block. Okay, so and we can also see all this one too is also, we have two type of other blocks. Okay, we have a bearish and bullish other blocks. So when we talk about that block, I may not really give the full details of other block because this is not, I'm not giving a teaching on other block on this video. Maybe on my next video I will do that, but I just want to give little about the other block here. So you can see here that we have other block here, and we also have other block at this region here as well. You can see this, we have other block here, and you also have another other block around this region here as well. Okay, these are other blocks, bearish other block. Okay, bearish other blocks. Now this is, if you look at this, why do I call them bearish other block? This is the last bullish candle market formed and the market dropped. This is the last bullish other block here the market did. Okay, this last bullish other block before the market sell. And if you look at this again, now I marked two things there. Okay, so I marked two things there. I marked the other block and the fair value gap. Okay, so other blocks and the fair value gap. So you can see here again that this is another thing again, or this is the other block the market formed or created, and last bullish other block then before this sell, which the market is giving us currently right now. So if you took this sell from here, you see how massive. I'm still holding myself for now. I'm still holding the sell, okay, with this entry. So I'm still holding myself for some days now. So this is a very simple, guys. For those of you that have been asking me, how do you get your point of interest and also your key level? Follow this process and make sure all these things I'm teaching you before you exercise it on your real account. Make sure you try it, back test it, and master it before you can use it. Okay, don't just go in and say because you are taught or you are told, you go and try it first on your live account. No, please master it on your demo or whatever before before exercising it on your live account. Okay, guys. So now I've been showing you bearish other block. Let's see if we can see a bullish other block. Here we have a bullish other block here. Okay, we have a bullish other block around this region here. So, but if you take notice of this did not hold here. I can see this bullish other block did not hold price around this place, and we have about two or so. We have a two other block here. Now, why many of you might say why did it not hold? Now, if you look at this, the clear indicator, we can see market change structure here. All right. So market change its structure and market is going down. Okay. You can see market broke and market change structure, created this high. And after it created that high, you can see how the market took out this support here. You see how market took out this support. So it's okay. The market indeed buy. Now, if you look at this here, I did not mark it well. So you can see the market bought. Okay, the market bought around that region, but the buy did not look at the buy, but the buy did not change the market trend, because already market has already changed its structure already. With this, you can see how the market came with this impulsive move and it took out these highs. Yeah, okay. So this liquidity by the left was taken out and price came down. Now changed structure by creating a new lower high and finally broke this support down and created another new lower high. So this is a clear indicator that market is bearish. All right. So when it says this kind of information, it's to tell you that market is what, on a bearish side. So now back to what I was actually saying. So we can also see, do we have other blocks here again? Yes, of course we have other block, which I can see right here. Okay, so this is another good other block for can you see this, guys? So we also had a bullish other block around this region here. Okay, so we are marking out other blocks, guys. Can you see this? So there was a buy order around this place here. So you see, and what happened? Price came to that other block and tapped here and started buying. So these things, before like I said, make sure before you try these things or before you master, look at another other block here again. So we have a lot of them, and you also have the fair value gap as well. So which I'm going to talk about the last one, the fair value gap as well. So we have the fair value gap. All right. So now the fair value gap, we talk about it, we say it's an imbalance. Okay. This concept, or although I have a video for them, so but I will not want to go deep on this because I don't want to make this video too long. So now we talk about the fair value gap. We say it's also an imbalance. All right. So price coming to fill in the to balance what is what not balanced. That's why we call it imbalance. Okay. So price coming to fill in the gap of which he left, either one selling or buying. So because there are two things that usually happen in the market, two things. Either market comes to take out liquidity or market comes to fill in the gap. So we have price, just for example here, can you see this here now? This one is an example of price taking out liquidity. So we see price took out this liquidity level, and liquidity on the left hand, so on the left side. So you see how price took out liquidity here, and after price took out liquidity and see how market started dropping. So that is what I'm talking about. Now let's look for examples of the fair value gap. Okay, we have the fair value gaps, although what me majorly I do is I mark both of them together, the other block and the fair value gap. But because I separated them, so I'm going to be showing you the fair value gap only. All right, so we can see this now. The fair value gap, you must make sure that we usually have the last. How would I do that now? Okay, let me see if I can give some drawing before I talk about that. So let's say we have a candle like this. Let's say this is a candle. So I have a candle here, and we also have another candle. We also have another candle. Now, guys, sorry for my drawing, but just understand what I'm trying to do. Then you also have another candle here. So let's say we are having 3 candles. Yeah. All right. So now this is candle 1. Okay. So we have 1, we have 2, and we have 3. Okay. Now, in the process of fair value gap, so we have these 3 candles now are bearish candles. Okay. Now, the process of fair value gap, the wick, we need to connect the wick of this candle here. All right. So the wick of this candle and the wick of this previous low candle here. Okay. I think, okay, let me see if I can get the screenshots. I think I did something like that. So let's see if I can get a screenshot of what of this fair value gap, so it becomes more easier for us to understand. Okay. Let's see if I can get a screenshot from it, because I think I did a screenshot on that. Okay, sorry. Okay, let me go. Let me get a screenshot. Screenshots. Okay. So pardon me, guys. This video is getting long. I just want to show us. Okay. So this is what I actually wanted to show us. Let me delete these things here. Let me delete everything here. Okay. So let me delete. Now, guys, look at what I'm talking about here. This is the example of the fair value gap I was talking about. Okay. So can you see this, guys? Can you see this now? If you look closely, you see here, this is the example of the gap I was talking about here. You can see here that we had, this is a bullish gap. So you see how price came here at this week here, now broke this first candle with this other candle here. And after breaking this candle, now formed the third candle here. And you can see that when price created this third candle, you can see here, below here, we have this wick. So you see this first candle wick and the third candle wick, you see how price came to fill in that gap around that place here. So when price came to fill in the gap here, so you can see that the market, but there was a gap here. This is the gap we're talking about. This gap between this candle, oh sorry. Now between this candle, so we had a gap between this candle, first candle and the third candle. The same thing occurred for the bearish candle too as well. You can see that we had this gap around this place. So we have a gap between this one here and this third candle. Can you see this? So gap one below this wick here, and gap two after this second candle. So the gap at the third wick of this candle. So this is the gap we're talking about. You can see bullish gap and the bearish fair value gap. So that is it, guys. So I hope you guys understand this right now. So having said this now, so guys, I've shown us an example of what I was talking about. So now let's look at it on the chart here now. Now let's look at it on the chart. Now, do we have a gap here? Of course, we have a gap here. You can see example of the gap we talked about right now. So we have a gap around this place here. So this is our gap. Okay. So this is our gap. We have a lot of gaps here, and you can also see again, we also had another gap here, bearish gap. Don't forget this week here. Don't forget this. They'll have the week at this place. So this becomes our gap here. So it's very, very simple, guys. So how do I get that? You can see we have this week at the first do a bearish candle. After this, the third, you can see this. So this is a gap right here, and you can see price came there and fill in the gap and dropped. Okay, so that is for bearish. The same thing for bullish. For the bullish, so you can see we also have a gap right here as well. So you can see we have a gap right here. So we had a gap right here. So the same thing, just like that, guys. So it's something you keep on carrying on like that, like that, like that. Okay. So you can see is that this is very, very simple. So they are very, very simple. If you carry them out, back test them, do more work on them, exercise on them more, then you understand all about this fair value gap. So traders, I hope you enjoyed this video. I hope you watch this video to the end, and I hope you've got a lot of benefits from this video. So don't forget to like, subscribe, and share this video so that it also gets to many that also want to watch this. And stay tuned, turn on notification bell, guys, so you can stay tuned whenever I post a new video. All right, you'll be the first person to watch. So stay tuned and wait for the next video, guys. See you guys in my next video.